are you, buddy? Bran? Yeah, I'll try. Hi, Paul. Hi, Blake. Your crew is in here, Bran? I don't know. Maybe you should call them. RC, Ryan, how are you? Kman's here. Okay. Marcus. Okay, trades are slow. People are waiting. Okay. I don't think you're going to have to wait that long. So, I want to ask everyone before I go to the charts. Next week is Inauguration Day. Well, they're slow. Right. We're going to react to the reaction. But Trump 2.0 trading begins next week. And you have a couple of options so that you could be trading these markets, be inside of the Forex Analytix community as a subscriber. Or if you need capital, there's a new program now that is makes capital very accessible as well, and still have the program with the assessment. So check it out and find a way to become part of something bigger than yourself, and perhaps your account will reflect that largeness. Everyone with me? Who's going to take some action today? Anyone new in the room? Okay. All right.
I've got to ask a question, Dale. Why is Inauguration Day on a market holiday?
Oh, that's right. What is it? MLK Day?
Yeah, you're going to be, you guys are going to
Correct.
be shut. Oh, it's going to be carnage.
Yeah, I didn't think about that. Yeah, maybe so everyone could pay attention to the inauguration.
Bingo.
Huh? You think that's a
Bingo.
possibility? Okay, because we know, people, um, people that need attention a lot. I call them ADD, not the kind that kids have. They have an attention deficit disorder because they can never get enough attention. That's my definition of ADD. Anyway, why don't we, anyway, guys, really, I'm serious about this. You got to get involved with the community, or maybe some of the people that you've seen here on the interviews. There's lots of great people, but you're going to thrive in 25 and you didn't in 24. Make a change. Try something else. Okay. So I'm going to start with Kman today. How are you this morning, Kay?
Morning, Dale. Morning, everybody. Yeah, I'm doing well, thank you. I hope you too.
Yeah, I am. Do you make anything out of the yen being down 100
Yeah,
pips today?
you wait are leaving the door open to a hike next week, although it didn't say it in as many words, but it's just leaving the door open. I also think that it's been well, not even thinking about the level 158, but it is like above 158. It does seem like people like to at least take profits or perhaps even try a bit short. Also,
Anything compelling in there that you would want to trade? Are you looking to sell rallies, buy breaks?
until inauguration, I'd say sell rallies will probably be the case. That's in case we get a sticky CPI. If the CPI is a bit weaker, I think that the yen is perhaps one of those who could actually trade a bit lower, because also the market will already be looking at Trump's inauguration, not thinking that the US will slap tariffs on Japan. We discussed that over the Flow Show as well. So there is a possibility, at least if CPI doesn't overshoot, that dollar yen trades a tad lower, and a tad, I mean perhaps 156, 155 and a half.
Okay, just it's an inside week, but I do pay attention to 2 week reversals. So if by Friday we're trading under 57.29, which we currently are, That would be a 2-week reversal. That's not a great signal because it basically takes into account 10 prior trading days, and to close under that close, at times they could be real good signals. Same thing in the Dixie. It's still above its 2-week. It's at 108.92. So potential for a reversal week in the Dixie.
Yeah.
Of course, you could
But the thing is, Dale,
throw your charts away for
yeah, exactly.
10 minutes.
I mean, talking around a little bit with mates and in the market, and everybody tends to agree that it can whatever happens today can be completely thrown out of the window come next week. There seems to be quite a few.
Lot of call buying, buddy of mine, huge call buying in
Well,
TLT
yeah, and
yesterday.
not only there, but there's I think in FX as well. If you look at the not the day traders, but if you look at the
COT.
short to medium term traders, I think there must have been a lot of options already traded and people going into next week with reduced dollar positions at least.
Okay. All right. So really, you're just waiting for
I'm actually,
day one. Yeah.
yeah,
See what happens after
yeah, and
inauguration.
I'm actually thinking of buying some kind of dollar put, but I'm still deciding on the currency pair just in case the market doesn't get anything on day one or or even the next day because it's a holiday on the inauguration day, and it's probably going to need to sit around the dinner table with Musk and Zuckerberg and Bezos and who else not there? Maybe even a big Chinese head, you know.
Yeah.
So I'm thinking of perhaps buying a little surprise put for the dollar come inauguration, but I'm going to do it via options. I won't have any cash because that's what I was saying this morning in our room as well. Whatever position you can have, long or short, both can be taken out on inauguration day or the day
Yeah.
after.
Yeah.
Both could be wrong.
Yeah.
So
Yeah.
I think
Just
options
the
are
time
better.
frame. Yeah.
Yeah.
It's a good time for options. Do you do anything besides just naked buying puts and calls? Do you take in some premium when you buy options like gold?
Yeah, I can do it via call spreads or put spreads.
Yeah.
But as being a retailer, there's very few good FX option brokers out there for us for the retail market. Either they're a bit expensive or they don't provide all the instruments. I mean, I'm half lucky that I have one that does a few different products, but people trading equities have a lot more fun and a lot more sorry possibilities to trade equity options. On the FX, it's a bit tough to find the good ones.
Okay. Did you do anything with gold? Because
I'm still long. I took some off, the other day
yeah.
on the first run up here up to 26, the high 2680s, because again, I never know what's going to happen. Because if it doesn't do anything, gold could actually lose, I don't know, 50, $100 or so. Because that gold is some kind of a hedge against what Trump may put in place day one, day two, day three. If he goes
Well,
really hard on the tariffs, in fact, if he really starts to sign very hefty tariff orders, then I think gold is probably going to be yeah 3K. I
yeah.
think the
Yeah,
three.
probably the width of this triangle, if we could stick the breakout. I was looking at the weekly, and um, we should make new highs because the real simple
Yeah, but
implicator.
mm,
Look at the RSI on it. Look at
yeah.
this. Before we rolled over, we
Mm,
had over an 80 reading.
mm,
Markets rarely top with this kind of momentum.
mm.
Now, when we make a new high this time, I doubt we'll get over 80, even if we, rally to 3. But
Yeah.
this is not a good sign that you have a top because
Hmm.
there was,
But
confirmed,
I've
bottom
been
line.
saying for a long time that even the consolidations, we consolidate at high levels. We're
Yeah,
not going back to if gold would not have been on people's radar, or if there wouldn't have been like as much risk with Trump coming in also. I mean, the logic would be with yields going up after that big Fed cut. The logic would have been that gold trades back 2,500 or below, in that cluster 23, 2,400 over there.
right.
But
Yeah,
we are trading close to 2,700. I mean,
yeah,
it is consolidating high, and that's what I've been saying all the time, and that what actually keeps me in the position as well, because that means that I'm not the only one thinking that it could absolutely ramp if Trump goes hard.
yeah. And it's also the preferred long because the gold silver ratio
Yeah,
is about to make new highs,
yeah.
which is a little bit counter trend to
Well,
the dollar. I mean, if
that's
the gold
yeah.
silver ratio is not is going to fail here,
Yeah.
or I'm thinking new highs, one more
But
new high.
that is one that could actually reverse if he goes really soft on tariffs, or if he goes like, oh, let's wait a little bit. I give you I don't know, 3 6 months to get your act together. I mean, then your gold silver ratio is probably going to trade lower, because silver needs a better economic environment than gold. Yeah.
Yes, and, right. So we'll see. So right now, gold, if gold's going to 3,000, it should drag silver up. But I'm waiting for about 95 here,
Mm,
and I'd actually tell people to flip their gold into silver with that ratio up there, because I think sometime next year we'll trade back, revert to the mean, which for many years was 50, 60,
yeah.
40. You know, that probably happens with the Fed getting aggressive with cuts
Yeah, could
later
be.
this year.
Could be, or
Anyway,
I think if, and I've been saying it already a good number of times. I think if you get a very good global economy or a Chinese revival, for instance, your gold silver
yeah.
is probably going to go down.
All right, Ryan, you have some input. What are you thinking before the number? If we get a hot number, would you be willing to sell dollar strength or you go with it?
That's one thing I would look at. I see pretty similar to what happened after the NFP. I warned how much further yields could go after that, and we didn't go much further. We saw
Yeah,
the same yesterday with PPI, although the other way missed expectations, and the dollar sold off a little bit, but then the market realised it still meant higher inflation, so it came back
yeah,
again. So I'm looking for similar to that, unless it's a real hot one, massively hot. Then coming in as expected, or maybe a pip higher, we're going to go a bit higher in the dollar.
yeah,
And then, like you're pointing out there, you look at your key levels.
yeah.
102. That's the key area down there.
I could see them flushing it one more time. You know why? Because I only
Yeah,
have two here, right?
yeah,
And so, and the RSI, if it did that, that wouldn't scare me
yeah,
because the RSI is going to be well above this level. This is not a great level to expect a strong bottom. Maybe it is if we pull back to 102.50 and go again. But
yeah.
you know,
If it goes 102, or even gets close to that prior low, but doesn't make a new low,
yeah,
then I'll be considering coming in and fading that move. I'll probably keep more of an eye on cable into that 121 again,
yeah,
because that's a big old level. Yeah, it's just a question of what you're going to do. Are you going to break back up, finally break some of these
yeah,
resistance points, 122, 40, 50 cable, 103 properly, euro dollar.
yeah.
If you're going to break them, you've got to hold them as well.
Okay. So anyway, yields are a little lower. Who knows? Maybe I think you fade strong numbers across the board, whatever
Yeah,
the reaction is. Yields, bonds. I would do this with options. You know, a lot of people make a living just following option flow, and they do in the stock market. They have things, um, where wise guy trades, which is normally retail, but they can make $1 million bets, retail guys, in options. But the ones that really come in are option sweeps, and they're pretty good tells. Uh, they're not always right on the money. Maybe there's one more low, but you're just going with the money flow. And there's huge call buying in the TLT yesterday. I'm not saying that they're going to be right, but even if we sold off on this number, um, you're going to have all kinds of divergences at new lows, and it may just start squeezing from here. So anyway, I think a big day in yields, a big day in everything, but I wouldn't be short down here. And I wouldn't be afraid to buy a new low, because a new low is going to set up even more compression with the RSI. And
I think you make,
with, huh?
I think you make an important point with the options. We know people use options to hedge, but we also know people use options to position, especially when that position can be fairly cheap. So there's always sort of two sides to the option market as to what's going on. I think, we're probably in a situation where a lot of the market getting into options not to hedge, but to
Spec.
maybe trade a reversal.
I just
spec.
did.
Go ahead.
No,
Go ahead.
I just did.
Exactly.
You,
Exactly.
okay. Blake, good morning.
Hey, good morning, Coach. Good morning,
Good.
Ryan, Kman.
Good to talk to an American.
Oh, thanks.
Did you really just say that? Damn, that's hardcore.
Well, you know
Boy.
what a patriot I am.
We're
Yeah,
going to war again.
Yeah, man. I mean, seriously, I can't believe Dale just said that. All right. Good
Oh wow, that's yeah.
Hey,
It's nothing like what I left on Skype this weekend for you guys. Anyway, go ahead.
hey, yes, I saw that.
Yeah,
I was like, oh boy,
unbelievable. Yeah,
unbelievable. Anyway,
yeah,
okay. Good morning. Happy
yeah,
CPI day. Today's
yeah,
going to
buddy.
be, as you guys were just talking about, a pretty big day. I've got my eye on the yen. There were some comments about from UEDA overnight, right? I mean, Ryan, what we hear from BOJ's UEDA?
Yes, there was a comment from UEDA that they're going to make a decision on whether to hike or not next week.
Wait a
which
second.
is a bit,
Isn't that a normal decision that they're going to make
yes,
during the BOJ decision?
it is. They always make a decision whether to what to do with monetary policy at every monetary policy meeting. But the market at the moment, it likes to take an inference as to what that means. It means it's not a no as far as another hike goes as they sit here today, even if it might be a no when they actually get to the meeting. But so market
Wait a
getting a
second.
little bit hoping again.
So are you telling me traders are hearing what they want to hear?
Oh, I wouldn't even dream of saying such a thing. Yeah, of course they are.
Well, price action. I know Dale, you were talking with Kman a little bit earlier about price action and the dollar yen. I mean, let's just acknowledge the fact that the dollar has been on an absolute rampage against euro, sterling, Aussie, Kiwi, everything. And if you look at what the dollar yen's done, really, since middle of December, it hasn't done much. And so anybody who's the dollar bull that's been buying the dollar against the yen is probably a little bit disappointed at this moment. The price action's not great. I know during the flow show, you guys were looking at 57, but every day, I think on the bias chart that we write down with the Forex Analytix traders, we write down 156 with an asterisk, which means that the 156 level is the level that, in my opinion, if broken, that's the level that's going to matter to me. I don't think that's going to happen today, but just with the bearish price action, I wouldn't mind selling. As Dale, you were just saying, I'd sell any hot number in CPI.
Yeah.
Maybe if we get a inline number where a lot of people are expecting the number to be a little weaker now after yesterday's producer prices. If we get an inline number, we might get some dollar snapback from yesterday. And if that's the case, maybe the dollar yen plays back up to the 157.
And relative strength wise, it's weaker than the dollar. Dollar made new highs this week, and even with the NFP we had last week, the yen barely made new
Yeah.
highs.
And
You
that's
know,
and
it's
that's the
much
point I'm
weaker.
trying to make is the dollar yen just really hasn't been participating since December,
Yeah,
mid-December. So where
yeah,
you've seen, you could take the Aussie would be a great example since
yeah.
mid-December. I mean, we have
Low, low,
absolutely
low.
just
Yeah,
getting creamed, Kiwi creamed. Now, by the
yeah.
way, Australia has employment data tonight, and everybody's looking for reasons why the RBA might start cutting rates sooner rather than later. So I say tonight, but it's actually tomorrow in Australia. So just keep that in mind if you're looking at the Aussie. I think the dollar yen should be in focus here, but also sterling. We had weak CPI, yet sterling's up a little bit, and as we were talking in the Forex Analytix chat room a couple hours ago. If you look at gilt yields, they've come down. Now they're still in breakout territories as far as I'm concerned, but
Could be
Kman,
a
is this
false
the
breakout. False
well, it could
breakout,
be.
maybe. Yeah.
But Kman, is this the reason why Sterling's up right now?
Yeah,
Even
just
though,
a bit less stress in the system. Um, but if you look at the crosses, I mean, if you bring it back to the sterling, it's a bit of a relief on the cable, but not really completely out of the woods there, I would say. So yeah, and just a bit of relief in the gilt market, and that's it. Now you're waiting for what's to come next, which is unemployment tomorrow, I think, in the UK as well, right? If I'm
yeah, we have
GDP.
GDP tomorrow, and then
GDP
employment
and
or no,
IP.
retail sales on Friday, right?
Yeah,
So
GDP and
GDP is going
industrial
to be the big
production.
one.
GDP tomorrow will be a
GDP.
big one. So in case you guys are stepping in front of the Sterling train, just be a little careful with that. As far as I'm concerned, technically speaking, well, we're in a descending channel, but we have to get above 123 for me to be, even considering long sterling in any way, shape, or form. But it doesn't mean that we can't squeeze a little bit. I mean, this currency has been beat down with the ugly stick as of the last few weeks. Dale, you talk about these divergence in the markets, but
Yeah.
I just want to point out with regarding the dollar. We're just a couple of days from inauguration. This is one of the things that on the morning edge, the daily roundup, the last couple of days, I've been talking about producer prices and CPI, and talking about the idea that we don't know what tariffs are going to be announced, if they're going to be announced day one, day two, day 30. We don't know. And the dollar is obviously in a very strong uptrend. And while we're above this breakout point, which comes in right here at basically 107.80, 108, and you can see that's also channel support. Those are the spike lows following last week's tariff announcements where, Trump had to deny them. That is really critical support. That's the bull bear line for the dollar, if you will. And I'm just going to say this, that while we're up here and you get maybe a little bit of a pullback in the dollar, you get maybe a little bit of relief if you're out there fading the dollar. Use this data to shore up some positions here. We don't know what's going to happen next week. I've been very, very limited on my trading.
Great
Actually,
advice, Blake.
I don't even think
Great.
I traded yesterday, Dale. I've been kind of, chopping around with the dollar. I win
Yeah.
some, lose some, and I'm just like, you know what? I'm just gonna wait till after the inauguration. I'll play some crosses, but trying to
I
play the
took
dollar
partials.
outright's
I
hard.
took
What?
partials in front of the number from the sales around 110. I took
Well
partials.
done.
Okay,
Yeah,
and
and
I always look, if you don't take partials, you're going to have a miserable time as a trader because you have to get paid. And now I have BE stops on it. Okay. So you really, you probe with your original risk, and your second P is you take a partial, and after you take the partial, you protect the remainder with tightening up your stops. If you just do that and take partials, because if you don't take partials, I forgot, who it was, it may have been Schwager or Peter Brandt, said if you're not taking partials, and Peter Brandt's a big, he does that all the time. Okay, that's part of his MO. And he says if you're not taking partial profits, you're making the assumption that the trade is going to be right. And for your longer term targets.
Yeah.
And that doesn't always happen. So if you're not taking partials, you're losing. You're not putting anything in the bank. Plus, it takes all the emotional heat out.
Yeah, I think he's been listening to our shows.
I'm a little older. I'm even older than you.
But
and I normally don't brag about it, but
no, I said he. I didn't say you. I said he must have been listening to our shows.
Who's he?
Well, the one you talked about.
Oh, Peter Brandt? I don't know.
I would assume that's veteran trading experience talking. I mean, that's what that is, and that's one thing that you guys get here on the F.A.C.E show.
Yeah.
But hey, real quick, and thank you, Dale, for the coaching lesson. We got just a couple minutes before CPI. I just want to say that whether the dollar continues or reverses or continues higher, in the next week or two, has really all to do with tariffs, expectations, where the market expects, sweeping tariffs. If they don't meet the 10% that the market's really hoping for, dollar bulls are going to be disappointed. You're probably going to see a bigger, reversal if he comes out swinging, after the inauguration with, sweeping tariffs across the board. The dollar is probably going to continue, and between now and then, this is a dicey time and this is where you need to be target trading. When I say target trading, just know your levels, trade your levels, trade around those, and don't get caught in FOMO. Not right now, not ahead of the inauguration. Until we know what we know regarding tariffs. Let's talk just real quick, because we've got the data coming out in literally 3 minutes. I got to get ready for the data for you guys. Ryan, what are you looking at today as far as what are you looking to trade?
I'm on Dale's boat, even though he insulted our nationality earlier. I'm on Dale's boat in potentially selling the dollar rip.
Okay, so you're in the selling dollar rip strategy right now. You think yields may have peaked, and by the way, S&P and futures are up right now because bank earnings have been coming out across the board. Good. Goldman, JP Morgan, Citigroup, all good earnings this morning. Okay, and by the way, we got yields here to the left, dollar index in the middle, S&P to the right. Kman, what are your thoughts? What are you looking at today?
Yeah, I think today could be a good rally sell on the dollar yen, for instance. That's one that I'm keeping a close eye on. For the rest, just let it run. I've just scaled back a little bit on my silver longs, but that's it. Just position managing for me for the rest.
And again, I very good. Thank you, Kman. And I'm with you as far as selling spikes in the dollar yen. Sounds like, Dale, you're in the same boat, same camp.
Yeah.
Sell dollar rally. Sell
and when you take partials and the market gives you another opportunity to do it again, you have more confidence because you're risking profits to re-enter what you took in after a partial.
Sure.
Learn how to trade.
What we haven't talked about, is we haven't talked about how about if it's a weak NADA? I mean, the fact of the matter is PPI came in weak. Traders have kind of shifted their expectations to at least a flat number, if not a miss today. So if we get a miss, the euro's been holding up well. I think Mike just mentioned it. Mike just said, "Hey Blake, how do you explain the euro dollar resilience?" I think it's from positioning. I think the market is max long dollars. I mean,
everyone hates the euro. All the news has been terrible.
Yeah, and the fact of the matter is the euro hit 102, which is a long-term 618 Fibonacci level.
We talked about that months ago. We're waiting for 102 for a long-term buy in the euro. Remember? Over and over we talked about that.
And we've hit it. Now it's hard to stick your neck out when we know what's happening in the next couple of days, but in the next week. But Hey, we got a few seconds to the data. But anyway, I think the euro is just, probably a little oversold. There we go. All right, data coming out.
Empire soft.
CPI.
Core a bit softer.
Very soft,
Inflation
very
in line.
soft.
Oh, the
S&Ps
core
are
data.
rocketing, and there goes the dollar. So we got what you were saying, Blake, at the end. So
Yeah,
bonds,
I mean,
bonds don't act great.
Fact of the matter is the
They're selling off.
Yeah, I mean the dollar's weak, and so here we go.
Oh no. Oh yeah. Those are yields dropping. All right. That's what we expected.
Yeah, I mean, the thing is do you follow this move higher? I was talking about the euro.
You know
actually.
what? Don't take partials. Don't take them. Don't take partial.
Dale's going back on it. Yeah.
I wish I would have had them all.
And just heads up. So the euro is almost at 103.40, which is it is at 103.40, which is a 618 retracement of the drop. Yeah. Probably at a level where squeeze enough people. Yeah. Be careful if you're long now, especially with potential tariff news coming out. I don't know if I would chase the euro higher at this point in time. Just be careful with it. So, all right, Dale. Well, guys, gals, just want to say thank you all for being with us today. Big data out today. Dollar is getting walloped. Oh, look at the dollar Canadian. This is a big deal. Dollar CAD is breaking lower and below or almost at channel support here. So,
well, Joseph Yang Monday, buying the Canadian dollar, deploying it into Canadian natural resource stocks with a dividend. Nice call, Fed guy.
Yeah, and I don't disagree with them right now because I've been wanting to buy Canadian dollars too. Just trying to figure out a place to do it though. Anyway,
yeah, you will if it's just starting. If it's starting,
Oh yeah. All right, guys. Good luck today, and Dale, I'm going to pass it back over to you, and have a great interview.
Buddy. All right. Thank you, Kman, Ryan. You guys are my mates.
Thank you, amigo.
Cheers,
all right. So
we'll call off our one battleship.
Yeah, well, yeah, I'd like to have you in the foxhole if I went to battle, Ryan. You and K-Man. All right. So, Dana, will you please accept a promotion? We'll accept your resignation after the interview. There we go. Thank you, Dana, and Happy New Year to you. Let me unmute you so we could talk markets. Oh, I thought you moved over here. Where are you? There you are. Hi, Dana.
Hey, how you doing, Dale?
All right.
You hear me now?
There we go. Yeah, we're on now,
Okay.
And
it's nice to be promoted.
Yeah. Let's see. There's the old chair. So okay. So Happy New Year, buddy. How are things going?
Someone else is sharing.
That's me. That's me. I'm going to stop now so you could do it. There you go.
Yes.
David Hess, did you grow up in Skokie? Okay, I'm going to allow you. Okay, Brand. Okay, so wow, lots happened since you and I talked, Dana.
A lot has happened, yeah. Well, we can say that. We can say that every time, right?
Well, yeah, a lot happens. Every 3 months.
That's what markets do. Yeah.
Yeah, unless it's private equity when it's opaque and you don't know, even though they tell you that. But so okay, correction.
No, it's been a very yeah. Go ahead.
No, so where's your head at? Here's what I think is the key question. So MAGA's under pressure, okay? And I don't know if they can make new highs. I think they could retrace, but I think there's money flow out of MAGA into things that weren't liked. Like people are starting to buy fertilizer stocks. It's a different blend of what people are going into now. And the source of funds are MAGA. Do you agree with me?
Well, there's so much money out there still that
Okay.
it's gonna find it's gonna go somewhere, right? And if you talk about what where was the money, before the summer correction,
Yeah.
obviously mega semiconductors, the AI
Yeah.
trade, what have you. Well, you mentioned
Semis haven't made new
fertilizer.
highs. Yeah.
What's that?
But semis haven't made
No,
a new high since
semis have
July.
not made a new high. Um, you're seeing clear lower highs there, and a lot of those large cap growth names that were all the rage back then.
Like
Although, you
Nvidia.
know,
Yeah.
hey, check out Nvidia doesn't look as bad still as the others. I don't know that
Okay.
there's not one more run in that one. We don't play individual stocks too much, but looks a lot better than the semiconductor than the
It
stocks chart.
does.
But
Yeah.
yeah, that trade looks to have topped out back in August, and you saw a ton of rotation back then out of, like you said, that Mag 7 stocks and into a lot of other stuff, defensive names, some of the other cyclicals, but a lot of the broad market. So the breadth, if you look at, for
Has
example,
been lousy, right?
um, what happened, yeah, recently, but if you move back to, okay, this is a value line geometric. This tracks the median stock. So
Yeah.
back in August, you saw that huge blow off in
Yeah.
semis and the
Right.
Mag 7. It's not even a blip on like the broad market charts here. Held up
Right.
well and moved to new highs pretty quickly. You look at the equal weight S&P. This is
Look
the
at
blow
where it
off top
held.
in semiconductors. It doesn't even register on here. In
Yeah.
fact, held up well. And what happened around then is the broad market and the breadth really started improving and took off.
Yeah.
And I think the last time I was on it was maybe in October leading up to the election. And what we thought was happening did pan out. We saw, the typical pullback in October leading up to the election. You saw volatility readings off the chart. People were getting all fearful and pouring into volatility for no reason because the setup was still strong. And after the election, we saw the unwind in volatility. We saw
Yeah.
a lot of the broad markets take off. Some of the things I think that we talked about in that interview was the small and mid cap pure value indices. We were waiting for those to take off, and we saw a real nice breakout, which is a good sign of risk on versus risk off. The small cap, mid cap pure value really took off. So
Yeah.
that that
Gave it
that
all
was
back.
that
Yeah.
was expected.
Okay.
What wasn't expected is, you
How it gave it back.
come into December, we're
Yeah.
hitting on all cylinders, and all of a sudden the tide turns. So,
Yeah.
the interesting thing, sorry, for us is, we're all quantitative. So we do what our models tell us to do, and our models are mostly based on basically what is the broad market, what is the market in general doing. The studies have shown 70 some percent of the direction of a stock is based on what the overall market is doing. So we want to measure what the overall market was doing, and
Right.
we've got a number of indicators that tell us that. The interesting thing is a week and then 2 weeks into December, the breadth and our indicators, which are many of them are slow to turn typically, they turned on a dime and started heading down. So
Yeah,
I
like the
was,
Dow. That looks a lot like the Dow break that we
yeah,
had.
but if I,
Would you say that it's foreign money that comes in and buys the Dow stocks because they want the security of large caps?
maybe that's true, but like I said, there's so much money out there still sloshing around, from the central banks that
Do you
it's going
think
to
the Dow
find
can do you think
somewhere.
that there may be a lot of money, but do you think the Dow can make a new high from here?
I
I
think it
mean,
can.
okay.
I think the averages can. I don't know that they will. I think they can. But just to quickly finish on back early December, if I look at the S&P, I think, okay, what are my indicators doing? They're probably holding up pretty well. They were falling off the table, so we got a sell signal like a week into December, which was extremely well timed and got us a little bit defensive. We should have gotten more defensive. I'm stubborn sometimes, Dale. I should just listen to these models that we built because they're much
I
smarter
know.
than us. But it was interesting to see. And then you look at something like the equal weight and
Yeah.
some of the broader markets, I mean, they
They
really
tanked pretty
collapsed.
good. Yeah.
Yeah, they got tagged. So from that perspective, just another lesson learned. The models are always smarter than us, and it's interesting to see what has happened to the market internals. And because we're going to follow those, we're going to follow the broad market. It's interesting to see what has happened um, since the beginning of December, because you wouldn't think that just by looking at the S&P chart. But
I know you're married, Dana, but before that, how many models did you date?
uh, only one
Yeah,
model that
yeah.
matters for
All
me,
right, all
Dale.
right.
No,
And
there we go.
were they smarter than you?
They're always smarter. I'm not a very
All
smart
right,
guy.
all right, all right. Yeah, you are.
One internal piece of optimism here. The AD line. So this one, going back 60 years, has always topped out ahead of the S&P. There's always been a divergence. Every
Yeah.
cyclical top in the last 60 years. This one did peak the beginning of December. So there might have been a day in there of divergence, but I think we're going to see a much bigger divergence
Okay.
before
That
the
makes
ultimate
sense.
top. So we could still see a blow off top in
Yeah.
some of the averages. I don't know. You look at something like the semiconductors, like I showed, that looks toppy already. The Dow, it's going to take some work to get back up there, but
Yeah.
I'm not putting out of the realm of possibility that another blow off move to the upside
Well,
before the
let's talk about what could be the catalyst besides the new administration. So the market really held up during this dollar rally. And
yeah.
I'm short the dollar now. All right. I
Mhm.
think that we peaked. And
Okay.
the bonds, huge call buying yesterday prior to this number. So, what have been headwinds,
Prior to the
if they
number,
turn
but
it,
it wasn't prior to somebody having the number, right?
yeah, oh, well, I'm not implying that. I'm just saying that big money were buying TLT calls yesterday.
Mhm.
The yen had stopped making new highs. There were signs
Yeah,
that yields could come in, and everyone hates the euro. Okay,
yeah.
and we could be putting in an important high in the dollar here. Do you think so?
I we're short the dollar right now.
Yeah.
Just it'll be a trade if we
Okay.
retrace back to 106 and change. We'll take that off, but we are hitting a 61 retracement there
Yeah. Yeah.
from the 2022
Well,
peak.
this
So
would help a melt up, no?
it theoretically it would. And the funny thing is, you look at gold, which has held up great in the face of the dollar rally. So
Yeah.
those relationships. That's why we don't love to do the intermarket relationships because they
Yeah.
change. um,
Yeah.
but that I certainly it could. Um, you look at another interesting thing. You look at international markets, which have not been faring very well lately.
Strong
But
dollar.
they've had weak currencies at the same time, which should be
Right.
helping them, and they've done nothing. But I think a dollar pullback certainly would help some of these international markets
Oh, the emerging
domestically.
markets. Yeah.
So that certainly that could be a catalyst. Where's my euro chart? It's obviously kind of the inverse of the dollar,
Right.
which is by definition. But yeah, the euro. This is the FXE. We trade ETF. So yeah, you're tagging that 61 retracement
Yeah,
of that
right.
recent rally. So you could see reversion there. You could see
Yeah.
reversion in
Yen.
yields,
Yeah,
bond
it's true.
yields. Um, Certainly the benefit of doubt's the upside, but you could see
Yeah.
certainly a nice mean reversion. I mean, positioning is certainly set up for it. Everybody's long
Yeah.
dollar short bonds. So
Right.
certainly you could see a nice reversion that should help equities, I would think, although I don't think equities here in the near term are out of the woods. Um, Certainly our models, our indicators have not turned around. So I think there's certainly more to this recent correction
Yeah, I'll sell a
potentially to
rip.
play out.
I'd sell a rip, Dana, right up around that red moving average if we get one this month. I think
Yeah,
there's one more shot down.
for sure. Because you look at, I mean, you look at, and a lot of the broad averages look like this equal weight. This might be a short-term bottom, but
Right.
yeah, up here around 180 on the
Yeah.
RSP,
Right.
you could get another wave down. You've seen, we found good support in the near term. You got the 23 retracement from that
Right.
20,
Yeah.
22 low
Yeah.
and the 200-day average, which is that the green line there. Similar story in the value line arithmetic. So this one measures the average stock in the market. So same thing, testing some fib numbers. We got the 200-day, but you haven't gotten any sort of a bounce off of it. So when I don't
Yeah.
see an immediate bounce off of it, I think, okay, we're setting up for
Yeah.
another down leg,
Yeah.
ABC type move,
Yeah.
bear
Right.
flag type move. So could get a bounce here, but yeah, I would, if you're not defensive, I would get defensive into some kind of a bounce here. This is another interesting thing, rewinding back to December. So here on the value, and this isn't the only one that did this, that 161 extension from the 2022 bear market, this value
You,
line tagged it
yeah,
perfectly
look at that.
just before
Yeah.
December and turned tail. So
Yeah.
sometimes these things work, Dale.
It still amazes me when my lines get tagged. Um, but now I call them magnets, so I'm not as surprised.
You're right.
Now I'm surprised when they don't.
Yeah.
Anyway, I was going to ask you, um, are you in any kind of agricultural area in stocks, fertilizer, ag base? Because China came in and made a very large purchase of beans. All the grains look good. Corn's been going up for a while. And I think, the reason these fires are happening here, besides, I don't know how they started, but we don't have El Nino anymore. We have La Nina,
Mm,
which is cold and dry, which will, um, stress the crops out later in the
yeah.
Midwest. And China knows that.
Yeah.
So, that's, I think agriculture is going to be a great area, grain related stocks. Do you own any or ever
I
trade any?
We do. So it's interesting you said that. Commodities in general starting to move
Yeah,
again, right? As
yeah,
I'm sure you've noticed. So here's the
yeah,
CRB index has done
yeah,
nothing for years, starting to
yeah,
move again,
right.
just popped above that 61 retracement. You mentioned some of the ag names. So DBA, we've
Okay,
been
yeah,
in for a while, still looks phenomenal, right? And this is not adjusted for this huge dividend here. So we're up in
okay.
new high territory here.
So this has been
DBA.
going
So a
on
lot
for a
of the
long
softs,
time.
yeah, a lot of the softs have been moving. You look at cattle, I mean, new highs still, but
Yeah,
stuff like not just the grains. Here's corn, we're long
yeah,
corn starting to move. But
yeah.
cocoa,
Oh,
coffee,
yeah,
I
yeah.
mean, these things are through the roof.
They've
Yeah,
done plenty of it.
for sure.
So
And
I
we're
think
seeing
it's a
other,
grain. The
yeah,
grains have been like, people hate the grains,
yeah.
they hate the euro, and they hate the miners. And I want your look on GDX, if you would share that, Jamie, because even gold and silver bulls hate the miners. And I think they pulled back to a pretty important area a couple weeks ago, an old breakout. And I don't know. Most people I talk to don't like the miners. They hate
Yeah.
them. They
Well,
go,
you look.
you'd be better off going to Vegas.
Well,
Oh,
most
that's
people that
copper.
love, most people that are in the minors probably been in them for like 20
Yeah,
years, right?
that's
And
why they hate
why
them.
would you not hate them if you've
Right.
been in this
They
for
should have hated them before they bought them.
right? Well,
Now's not the time to hate them, I don't think.
that's why we try to be objective and go to our relative our investment selection
Yeah.
process is relative strength. So we want to go to what's working. And obviously this has not been working for a long time, GDX and the gold miners. We are long because we do like gold. We've been long gold for a while.
Yeah.
We've been long miners. We've been trimming. We trim some into this bounce.
Okay.
Don't love it here. It's got to prove something to me. So
So
if
what?
you're calling a
Break it.
bottom,
Yeah, I'm calling
that
about it.
okay. Well, that makes me feel better. But it's got a lot of resistance get through here. And you look
Yeah.
at silver miners,
Silver's worse.
hitting lower lows.
Yeah.
You look at copper miners, has been
Better.
you know,
Eh.
it's been okay, but kind of
Yeah.
unpleasant to be sitting through all this. So you got spurts that get you excited. Nothing is better for
Oh,
sentiment than rising prices, and people get
yeah.
excited, pour into it, and then how long have they gotten the rug pulled out from under them though? So for
Yeah.
decades. So especially, I mean, you think about what have they been waiting for? Um, the gold bugs.
I have rug burns on my knees
Yeah.
from that.
What have the gold bugs been waiting for,
This is it.
I don't want to hear about that, Dale, but yeah, for a decade plus, this is what they've been waiting for. And then you look at
Yeah.
the miners action, it's like wah wah, So I don't know if they're going to get going. Um,
All right.
in the short
That's
term, they're more
fair.
of a sentiment thing. So
Yeah,
maybe
see?
sentiments is bad enough that they can get going. Right now, it's for our models, they're
Okay.
okay. They're not like screaming, okay, this is what you want to be really aggressive in. So, but
All right. Well, then let me ask you this. Some people are calling WTI a breakout this week. I know you trade oil related issues in ETFs. Where are you at on that? Because I know others, some bears that are saying that this is a selling opportunity in the oils.
yeah,
WTI anyway.
similar to the CRB, which is really CRB is pretty much just crude. So I had a nice move, but again, you got a lot to prove here. This is a GSCI
Man,
crude oil index. You got a lot to prove if this
yeah,
is going to be a real move. I do like,
2 year base.
if you go to USO, looks a little bit more encouraging for sure. And
Natural
um,
gas looks the best though.
natural gas as well, but that's the widowmaker, right, Dale?
Yeah,
I
yeah.
mean, every time you think, okay, this is the one, this is the
This
one,
is, this
yeah,
is,
is
man.
it,
I'm
is this the
telling you.
one? I don't know. I'm
Just
long,
call your insurance agent and buy a dip.
yeah, I'm along a little bit, but always
Uh,
I always expect to be wrong on that trade,
uh,
but long a little bit there.
all
Uh,
right.
the one we are long XLE, the
Okay.
energy, the equity ETF.
How about
Interesting to
Mag?
me because real quick, okay,
Okay.
testing the highs from a decade ago.
Yeah.
So
Yeah.
maybe the
Yeah.
last couple years of consolidation is healthy. We
It's
haven't
just been
fallen off the
sideways.
table. Yeah,
Yeah.
maybe a modified cup and handle type of situation. Because if we broke out, and breakouts don't work anymore like they used to, that.
Yeah.
It's
There's a
usually a
lot of
rug
false.
pull, but
Yeah.
then we turn around and go. So we are along this. It's held up nicely.
Okay.
but a breakout here would be, something that could be pretty explosive. You have to get people doubting and betting against it though, which is, people have turned against crude oil, like your friends that are doubting this move. So,
Yeah.
eventually I like the prospects for this one. And maybe that has to do with the incoming administration, which should be, quite obviously a lot more favorable, but we'll see.
Okay. God, we covered the whole board. Do you
Yeah, let
think
me tell you one thing about, where
Go
am
ahead.
I extremely bearish long-term equities. So we look at the longer term, what we call the background picture for risk in US equities, and you look at long-term metrics like Oh, like household investment.
Yeah,
They've
record highs.
got
Record.
record highs. 43% of household financial assets are in stocks. You look at valuations are basically the highest they've been, except for the 2000. You look at things like the Buffett indicator, market cap to GDP, all-time highs. You've got market cap is twice what GDP is for the first time. All these background, and they're not timing indicators, so they're not
No.
helpful in managing money, so to speak, but they're helpful in getting and gleaning an idea of the overall risk situation, and very highly correlated longer term 10-year um, investment returns, stock returns, and they're all pointed to basically as high a risk situation as we've ever been in this country from an equity standpoint. So from that standpoint, I'm very pessimistic on, if I'm going to buy and hold over the next decade or so. I'm not too optimistic about those returns. So
Well, that's why
again,
people are going to need people like you. I've been saying that the days of owning the spider and playing golf every day is over.
yeah,
And
that's
people
well.
are going to have to learn to be tactical, and they need people like you to do
If
it.
that, yeah, that would be my point. And it's hard to get people to consider that
Well,
type of management
yeah,
when you're hitting new highs every year
yeah,
and things are hunky dory,
yeah.
and especially
They're
we haven't had a terrible, we've had some corrections 2022, we've had some corrections this summer, a little
they
shots
don't
across the bow. We
stick.
haven't
Yeah,
seen
no.
since the financial crisis really real pain, and I'm talking about Great Depression or 1970s type action where you don't go anywhere for a decade plus, and that's something that people aren't planned for. I think you need to have an open mind, and if you can open your mind to at least diversifying some of your portfolio to managers or strategy that takes
Yeah.
that into account, I think that would be probably the smartest move you could make right now.
Okay, we'll show people how they could reach you.
Oh,
If what we've said today reaches them. And you know what? If you have huge capital gains, that's great. But let me tell you a story. I had an office in Cardiff by the Sea in San Diego, and it was in the dot-com bubble. And after it popped, people were coming to me and go, Dale, what should I do? And I said, sell. And they said, oh no, my capital gains would be too much.
yeah,
So they ended up giving it all back and then some because they didn't want to pay the taxes. I said, be grateful that you have capital gains and you have taxes to
absolutely,
pay. Anyway,
absolutely.
don't ever
Yep,
make that mistake, a market decision based on a tax event.
100%. Yeah, I
You
agree
know,
with
it's
you.
so it's always so great talking
And
to
here's
you,
your
man.
old apartment, Dale.
Oh yeah, Bob Newhart. I went
Marina
down and had
Towers. Yeah.
we
Um.
met in the bar down there, Bob Newhart and I.
Oh yeah. Wow.
I'm
Rest
kidding.
in peace. Right.
Yeah,
Yeah.
yeah.
Um.
Anyway, go ahead.
Anyway, yeah. So, like I always mention, our main business is managing money. We have a registered investment advisory, but we also have this service for. I know most of your listeners are traders and like to pull the levers themselves, but we do have a service, the lion's share, where we give you on a daily basis what we're looking at, what charts, what analysis is on our radar, and then we also tell you exactly what moves we're making in our portfolios. You just pull the levers yourself. So if you want another view, another lens, and you're interested in following what we're doing, this is one way to do it. And we did run a 20% off holiday sale a couple weeks ago at the holidays. If you're interested in that, I'd be happy to give you 20% off. You just reach out to me or Dale.
Wow, yeah, that's generous. So, I'd recommend you guys think about it. Dana's from Chicago, and I think it's an edge because there are a lot of traders that still are in Chicago, even though the floors are gone. So Dana has had this long-term idea behind it, and still following his models, which was probably a lot of work to generate them. Every time I talk to him, he has been taking advantage of things that are going up and avoiding things that are going down. That's the bottom line, bro.
That's the goal, right, Dale?
Yeah, and I hope that you and your clients, what is it? They all thrive in 25.
I like it.
And here's what I'm telling leverage traders.
It might be survive, but let's hope
it will. Well, we
thrive.
could thrive. We could thrive while others are trying to survive.
Yeah.
And I know it's going to be not easy for anybody. But you know what we have to do then? Let's have a good decade next year.
Okay, let's do
All right.
it. We
you
always
like that?
We always have something to be grateful for, right, Dale?
Exactly.
Yeah.
So, the fact that we're in the markets and can afford to do that, and the fact that, our relationships we're not going to be thinking about our best trades when it's all said and done. All right, brother.
I'll let you speak your punchline for for yourself, but
what?
I agree with it 100%. It's always nice talking to you, and you've got a great community there. I appreciate being on every time.
All right, Dana. Happy New Year, buddy.
Same to you, Dale.
All right, Dana Lyons, everyone. Follow him at J Lyons Fund Management on X, and go to his website. He's a great technician too. So I think he should be part of your intelligence gathering. Always learn from Dana every time I talk to him. All right, everyone. Don't just count your pips, count your blessings. See you tomorrow, Thursday. Okay. Adios. They're thanking you, Dana.